Cash flow mistakes killing small businesses. Welcome to the Business Growth Playbook, the podcast where we break down what actually drives sustainable growth, profitability, and scale. Today's episode is one of the most important conversations you all hear as a business owner. I'm your host, Dotun Oladele. Because businesses don't usually die from bad ideas, they don't even die from lack of sales. They die from cash flow mistakes. In fact, studies consistently show that cash flow problems cause more than 80% of small business failures. So today, we are unpacking the cash flow mistakes killing small businesses with real case studies, practical examples, and exact fixes you can apply immediately. It's not lack of ideas. It's not even lack of customers. Often, it's poor cash flow management that brings businesses down. In fact, studies show that nearly 82% of small businesses fail due to cash flow problems. Let's dive into the most common mistakes, and I'll share real-world case studies to bring these lessons to life. Let's get into it. 1. Confusing profit with cash flow. The first and most deadly mistake, confusing profit with cash flow. Profit is an accounting concept. Cash flow is survival. Case study 1. The profitable business that went broke. I worked with a service-based company doing over $2 million annually. On paper, they were profitable. But behind the scenes, client paid 60 to 90 days later. Payroll was monthly. Vendors demanded cash upfront. The business looked healthy on the income statement, but the bank account was constantly empty. Eventually, they couldn't meet payroll. What's the lesson in this? Profit doesn't pay salaries. Cash does. Fix this today. Track cash in versus cash out weekly, not monthly. Separate cash flow reports from profit reports. Always ask, when do I actually receive the money? 2. Growing too fast without cash planning. Growth is exciting, but uncontrolled growth kills businesses faster than stagnation. Let me give you a case study here. The fast-growing retail brand. A retail brand doubled revenue in 12 months. Sounds like success, right? Here's the problem. More sales required more inventory. Inventory tied up cash. Suppliers needed upfront payment. Customers paid later. Sales went up. Cash disappeared. They ran out of money at their highest sales month ever. What's the lesson here? Growth consumes cash before it generates cash. What did I say? Growth consumes cash before it generates cash. Fix this today. Forecast cash needs before scaling. Forecast your cash needs before scaling. Never grow faster than your working capital. Secure credit lines before you need them. 3. Poor invoicing and collections. Very many businesses have poor invoicing and they have very poor collection rates. Another silent killer, slow invoicing and weak collections. Case study, the consulting firm with $5 million stock in receivables. A consulting firm had over $5 million in unpaid invoices. Why? Invoices sent weeks late. No clear payment terms. No follow-up system, fear of offending clients. They were essentially financing their clients' businesses. What's the lesson here? If you don't control collections, your customers control your cash flow. Fix this today. Invoice immediately upon delivery. Set clear terms. Set clear payment terms. 7 to 14 or 30 days max. Automate reminders. Assign one person responsible for collection. Number 4, overhead creep and lifestyle spending. Many businesses don't collapse suddenly. They bleed slowly. The bleed is called overhead creep. Let me give you a case study. The office that killed the business. A startup upgraded offices too early. Premium rent, unnecessary staff, luxury branding expenses. Revenue stayed flat. Expenses kept rising. Within 18 months, cash reserves were gone. What's the lesson in this? Cash flow doesn't fail because of one big expense. It fails because of many small unnecessary ones. Fix this today. Audit expenses quarterly. Separate business needs from ego ones. Tie overhead growth directly to revenue growth. Number 5, no cash buffer or emergency reserve. If one delayed payment can crash your business, you don't have a business, you have a gamble. Let me give you a case study. One client delay equals shutdown. A logistics company relied on 2 major clients. One delayed payment by 45 days. That single delay stopped fuel purchases, missed payroll, triggered layoffs. What's the lesson in this? Every business needs cash shock absorbers. You need to fix this today. Build a 3 to 6 month operating reserve. Treat results as untouchable. Plan for delays, not best case scenarios. Number 6 that you have to look at. No cash flow system or forecast. The final mistake. Running blind. Many owners check their bank balance instead of running forecasts. What's the reality here? Without forecasting, you don't see problems coming. You react too late. Decisions become emotional. Fix this today. Create a 13-week rolling cash flow forecast. Review weekly. Use it to decide hiring, expansion, and spending. Call to action. The closing line. Let's summarize the cash flow rules of survival. Profit is theory. Cash is reality. Growth without planning destroys businesses. Get paid faster than you pay out. Control expenses relentlessly. Build results before emergencies. Forecast cash weekly, not yearly. If you master cash flow, you don't just survive, you gain freedom, leverage, and control. That's how real businesses grow. If this episode helped you or is helping you, share with another business who needs it. This is Business Growth Playbook, where we build businesses that last.